Micron just reported the single best quarter in the history of the memory business. The stock hit an all-time high, and some of the smartest money on Wall Street spent the days right before that report dumping it. Both of those things are true, and the gap between them is the whole story. 2 days before Micron reported earnings, the entire memory sector got hit. Micron dropped double digits, SanDisk dropped double digits, and the financial media started whispering the word bubble. Then Micron printed numbers that frankly broke the model, and the stock ripped to a brand new all-time high. So, which is it? Is this the best AI infrastructure story on the market, or a cyclical stock priced for perfection right before the cycle turns? The honest answer is that both camps are half right, and that's exactly where money gets made or lost. So let me walk you through what Micron actually reported, why Wall Street panicked first, and the two traps hiding underneath the record headline. Let's start with what actually happened, because the numbers matter. Micron's earnings came in at $25.11 per share against expectations of $20.20, a 24% beat. Revenue was $41.46 billion versus a $35.82 billion estimate, so they beat the top line by nearly $6 billion in a single quarter. And the guidance was the real shock. Micron guided next quarter to between $49 and $51 billion in revenue, earnings of $30 to $32 a share against a $25 estimate, and gross margins near 86%. Let that sink in. A memory company, historically a brutal, low-margin, commodity business, just guided to 86% gross margins. The stock jumped close to 16% and printed an all-time high around $1,150 a share, pushing Micron into trillion-dollar territory. This thing is up more than 10 times in a single year. The market is no longer pricing Micron as a cyclical chip maker. It is repricing it as core AI infrastructure. So, before we get to the bear case, sit with that question for a second. When a memory company guides to 86% margins, is that a new normal, or is that the top? The run isn't fantasy, and it's important to say that clearly. The demand is real. Micron's high-bandwidth memory, the stuff that sits next to Nvidia's GPUs, is sold out through 2026. The entire industry is in what people are calling a memory supercycle. AI data centers are now soaking up the majority of high-end memory. NAND and DRAM contract prices have been rising double digits quarter after quarter, and suppliers are getting less than half of the wafer capacity they ask for. This is a structural shortage that most analysts expect to last into 2027 and 2028. And just before earnings, Nvidia formally certified all three big memory makers, SK Hynix, Samsung, and Micron, for its next-generation HBM4. So, the bull case is not hype. The shortage is real, the pricing power is real, and Micron is in the middle of it. Hold on to that, because the bear case doesn't argue with any of it. Now, why did the stock crater right before the best print in its history? 2 days before earnings, the whole memory complex sold off hard. Micron down around 13%, SanDisk down around 12%. And the trigger was a rumor. Word spread on trading desks that Nvidia's next platform, Vera Rubin, was cutting its memory in half, from roughly 55 terabytes a rack down to 28. The algorithms read the headline, Nvidia cuts memory, and dumped every memory stock in sight. But here's the part the panic missed. That cut is on the CPU side memory, the SOCAMM modules built on LPDDR5X, and it's happening because of a supply constraint, not because demand fell. Nvidia simply can't get enough of those chips to fill every slot. The high-value memory, HBM4, is completely unchanged. And because each rack now uses fewer modules, Nvidia can build roughly twice as many racks with the same supply. In other words, total memory demand didn't shrink. It got spread across more systems. The headline was scary. The headline was also wrong. Wall Street misread it. But here's what the cheerleaders skipped over. And this is the part that matters. On that same Vera Rubin platform, the crown jewel memory is HBM4, and Micron's share of Nvidia's Rubin HBM4 is reportedly close to zero. SK Hynix is taking around 70% of it, Samsung around 30%, and Micron's overall HBM4 share is projected at roughly 18%. Now, Micron did win the other socket. It was first to a 256GB SOCAMM module, and it's been Nvidia's core SOCAMM partner for years, which, ironically, is exactly the memory that got cut in that rumor. So both of these are true at the same time. Micron is sold out and certified, and Micron is currently on the outside of the highest value memory in Nvidia's next platform. The record headline tells you the first half. It does not tell you the second. That's trap number one. You're being sold a clean story about a company that just lost the most important socket of the next cycle to its Korean rivals. Trap number two is older and simpler. Memory is the most cyclical business in all of technology. Every supercycle in history has ended the same way. The shortage drives prices up. The high prices pull in new capacity. The new capacity becomes a glut, and prices collapse. Right now, SK Hynix, Samsung and Micron together are pushing combined capital spending past $75 billion a year. That capacity doesn't arrive tomorrow. It arrives in 2027 and 2028, which is precisely when analysts are warning about oversupply and price compression. Meanwhile, the stock has run more than 10 times in a year. It was trading around 50 times earnings going into this print, far above its long-run norm, closer to 20, and Micron's own insiders sold roughly $92 million of stock recently. None of that tells you the top is in tomorrow. What it tells you is that the margin for error has gotten very, very thin. You are paying a record price for a business that has never stopped being cyclical. So here's the honest scorecard, and I want you to hold all of it at once. Best fundamentals in the history of memory, true. Sold out through 2026, true. Lost the Rubin HBM4 socket to Korea, also true. Priced for perfection on a business that has always boomed and busted, true. The mistake most retail investors make is forcing this into a single story, all bull or all bear. But Micron can be a genuinely phenomenal company and a dangerous stock at $1,250 at the exact same time. The question was never, is Micron a good company? It obviously is. The real question is whether at this price you're buying the fundamentals or you're buying the hype that's been built on top of them. So I'll leave you with the actual debate, not a price target. The bulls say the shortage is structural and Micron has graduated from a cyclical chip maker into permanent AI infrastructure. The bears say it's the same boom and bust it has always been, trading at a record right as $75 billion of new supply gets built. Here's what I want from you. Which side are you on? New paradigm or classic cycle top? And does the lost HBM4 socket change your answer? Tell me in the comments, because I read them. If this gave you both sides instead of just the cheerleading, subscribe. This channel breaks down one company at a time. No hype, no noise. I'll see you in the next one.